Hello viewers, in this video I'll be going over gold miners, ticker symbol GDX. So today we had gold miners having a bullish start but ended the day down or lower than where it started. So we saw the action happening yesterday and today as well. It opened roughly around this price level and it closed below. As you can see on the daily chart, the daily chart is currently red, and let's go over the 1 hour support that I saw. It was briefly broken. It was also broken yesterday as well. So we have a downward bias, and then let's look at the 4 hour. We are not nowhere near oversold on the RSI, so there's more downward movement. So and also, as you can see, the next minor support level will be the 204-hour support level, which is at 22 and 6 cents. I believe that's not a good support to rely on. A better support will be on the daily chart. On here, as you see, as the 50-day moving average, this is the next real support that I will be counting on, and let's mark it here. Reason why I see this gold miners having a more chance of moving down, we have a head and shoulders pattern. You see here dating back to January 31st. This is a resistance, a price level resistance, or you may say it's a ceiling for the gold price. And this is the left shoulder, and this is the right shoulder, and this is the head. Typically these patterns have a downward movement, so expect gold to be moving down most of the day rather than moving up. So next, let's look at the other module. So in this module, I'll be showing why this current trend is similar to the trend in the past. And since these trends are similar, they tend to have similar outcomes. So I'll point out why. So let's start with the beginning of the trend. So we have the trend above the middle moving average or middle Bollinger Band. And we'll make this pink. And it also starts below, just below the middle Bollinger Band, and we'll make this blue. So, and it made clear strides in bullish indication. Reason why, there were points that people were concerned about Brexit, but looks like the fears were not evident and they continue to sell off. So let's mark the points down here as well. We had a purple rectangle on above the middle Bollinger Band. If you're not familiar with the Bollinger Band, it's a tool used to measure price level and volatility. And we have here teal rectangle, and let's mark the red overbought Bollinger Bands. We have two here, and as you can see, it's starting to shape out with the current trend after having two red circles. It makes a dip or a touch back to the bottom Bollinger Band, and let's make that here. It dips below the middle Bollinger Band, and it will continue to play out as I see here. But on this trend, or the past trend, is more forward looking, so I expect this to happen. But on the current trend, it has not occurred. Reason why, it hasn't touched the bottom Bollinger Band, so that may happen soon. This is probably when the Fed speaks on Wednesday. they might announce hawkish tone, scaring the market and having the dollar rally. So that may be a possibility. And with the strong dollar, you're going to have weak commodities like gold and oil. So that is one thing to look towards. So as you can see, we have some target points, and let's also look at the MACD indicator. As you can see, this converges up as well, and another convergence here, and a slight convergence, or not a clear convergence, a good attempt on converging. And let's make the diverging points. So you start to see that this chart, it looks similar. Well, I haven't marked on the other chart, but you'll start to see that there are three converging, and one, or two converging and one that's slightly an attempt on to converge, and then two diverging. And so we have about several instances that are identical. Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 points that are identical. Since these points are identical, we have reason to believe that this outcome should be the same as the current trend. So let's look at the forecast. Oh, before that, this trend is January 7th, 2011 to October 11th, 2010. So let's look at the projection model. So projection model is currently at day 0, 1 day out, 2 day out, 3 day out, 4 day out, 5 day out, 6 day out, and 7 day out. So in 7 days, the trend that we took a look at, January 7th, 2011 to October 11th, 2010, GDX will be down around 1.7%. So I do see there's a downward bias to gold miners in the next coming days. So I expect that to happen. And that is all. If you like this content, feel free to subscribe, like, comment, and thank you for watching.